Welcome back to Alpha Recap, your quick, smart debrief on today's markets. Markets closed for the day, and we've got a lot to unpack. Tech led modest gains, small caps lagged, and an eye-catching IPO stole the headlines. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. So what really stands out here is the narrowness of the rally. Big names drove the gains, while a lot of stocks barely moved.
Right. The S&P 500 ETF finished up just under 0.3%, while the Nasdaq 100 ETF outperformed with about 0.6% of upside. Meanwhile, small caps underperformed. The Russell 2000 ETF closed down about 0.5%. So why did that happen? Two big corporate stories dominated the tape. An outsized earnings beat from Hewlett-Packard Enterprise and a blockbuster initial public offering from Anthropic. Both pushed flows into large-cap tech and AI-related names.
Right, and the way those two things interacted mattered. The earnings clarity from HPE made investors more confident about enterprise tech spend, while the Anthropic IPO refocused attention on GPUs, cloud providers, and application software.
Let's talk specifics. And the number that really caught our eye. Hewlett-Packard Enterprise jumped about 30% after what commentators called its biggest earnings beat since 2018. That moved a lot of peers.
Honestly, I was a bit surprised by this one. You could see the trade flow. Hardware suppliers, enterprise software names all picked up steam on that print. It wasn't just a one-off reaction. It felt like a re-rating of enterprise visibility, at least for the session.
And on the other side, Anthropic's IPO was a headline grabber. The listing was large, the demand strong, and the aftermarket interest helped lift names tied to the AI ecosystem. So, yeah, that tracks.
It did feel a bit theatrical. An IPO that steals the narrative while an earnings surprise quietly reshuffles a sector.
Short reaction? Right.
Short reaction? Yeah, absolutely.
Moving into sectors. Technology and communication services led, concentrated in software, cloud infrastructure, and semiconductors tied to AI. That's why the Nasdaq 100 outperformed. Analysts noted renewed flows into chips and cloud infrastructure.
Industrials were mixed. Some capital goods names got a lift after positive notes from research desks, but materials were patchwork. Resource companies with clear projects outperformed, while explorers and higher-cost producers lagged.
Financials were fairly muted on the whole. Large banks didn't move much, while regional banks and smaller financial names showed pressure. Real estate had pockets of deal activity that helped a few REITs, but the sector was basically range-bound.
Energy trading was choppy, sideways in parts as policy chatter and project risk offset what looked like decent fundamentals in some oil service and renewables names. Utilities did pick up a bit of interest tied to electric vehicle infrastructure and grid modernization themes.
And cannabis got hit. Increased regulatory scrutiny removed speculative froth and trimmed the group significantly. Not a great day for pot stocks.
Yeah, that tracks.
On notable individual movers besides HPE and Anthropic, Intel slid down about 5% after investors voiced disappointment around execution and margin commentary. A reminder that even big chip names aren't immune to skepticism on product ramps and competitive dynamics.
Right, and that hurt other chip-related sentiment a bit, even as pure AI hardware plays get flows from the Anthropic excitement.
There were some interesting smaller stories too. FTAI Aviation and its infrastructure sibling drew attention after company updates and analyst discussion on asset valuation, prompting some re-rating chatter in aviation finance circles.
And select cannabis names, think Tilray and Canopy Growth, felt the regulatory headwinds. Investors pulled back on speculative exposure until regulators clarify the path forward.
A quick aside on IPOs and market psychology. When a big AI-related IPO lands well, it often creates a halo effect. Cloud providers, GPU suppliers, and app layer software can see increased attention, but that interest can be narrow and short-lived if the aftermarket turns to profit-taking.
So what really stands out here is the concentration. The headline indexes were up, but the internal breadth was muted. That's been a recurring pattern since 2023. A handful of megacaps can lift benchmarks while most stocks don't participate.
Exactly. Technically speaking, the Nasdaq 100's leadership is supporting the broader indexes, but small cap underperformance, remember the Russell 2000 was down about 0.5%, is notable. Historically, when small caps lag while large caps rally, it can precede consolidation unless breadth improves.
Right, and momentum indicators suggested traders were reacting to news rather than committing to a broad, risk-on posture. Analysts described two plausible near-term scenarios. Either earnings and IPO demand broaden the rally, or leadership stays narrow and the market becomes more vulnerable to downside if macro or corporate news disappoints.
On macro, nothing earth-shattering printed today. But market participants were still watching the Fed backdrop. Inflation has slowed from its peak, but in many measures remains above the Fed's target, so any fresh signal could tilt positioning. For now, the job of the Fed looms in the background of many trades.
Right, and for fixed income, the bond market's response to earnings and risk appetite will be important. If the market keeps favoring large cap growth, real yields could shift and influence sector flows. Conversely, a pickup in cyclical rotation might pressure growth multiples.
Quick checklist for what to watch next session. Follow through on HPE's earnings, the Anthropic aftermarket to see if demand holds or if there's profit taking, any fresh commentary from Intel or other chip names, new macro prints or Fed speak, and whether small cap breadth stabilizes.
Right, and a stabilizing Russell 2000 would be the clearest sign that risk appetite is broadening. If that doesn't happen, expect volatility when headlines turn mixed.
Takeaways. 1. Markets closed up, but on narrow leadership. The Nasdaq 100 outpaced the S&P 500, and a handful of names accounted for most of the upside. 2. AI and enterprise tech remain the short-term theme driving flows, thanks to the Anthropic IPO and HPE's beat. 3. Breadth, weakness, and regulatory or execution risks in other sectors argue for selectivity.
And 4. Keep an eye on follow-through. Earnings, IPO aftermarket action, semiconductor cues, and any Fed-relevant macro prints. Those will tell you whether this rally broadens or stays concentrated.
Final note. This recap is for informational purposes only. Analysts note trends and momentum, but this is not a recommendation to buy, sell, or hold any security, and it's not personalized advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. Catch you next market close.